Hello and welcome to the Genuine Learning blog. My name is Melissa Glasso, and today we're going to talk about a FASB proposal in a very niche area. This is a proposal regarding discount rates used to measure the benefit obligation for certain market rate cash balance plans. So again, very, very niche. Stakeholders have indicated that there are different interpretations in practice on how the measurement guidance in 71530 should be applied to these market return cash balance plans. And they feel like sometimes the accounting is not intuitive, doesn't reflect the economics. So what is a market return cash balance plan? It is a type of cash balance plan with a variable interest credit rating based on an investable market return. And in these plans, the promised benefit to the participant at retirement or termination, if they just leave, is equal to the principal credit and interest credits, which could be the actual investment returns on the principal credits subject to certain requirements. The issue that was identified is that when an entity uses a discount rate other than the assumed interest credit rating to measure the benefit obligation for those plans, the benefit obligation is often is different from the plan's hypothetical account balance, which is made up of principal credits and future interest credits based on those principal credits. So they are updating the standards and would require the entity to use the assumed interest credit rating as the discount rate to measure the benefit plan. So basically, because that's the expectation there, again, there are certain requirements. So first, the pension benefits are communicated to employees in the form of an account balance that comprises principal credits and interest credits based on the return, they're on the plan assets, the return on a subset of plan assets, and the return on a regulated investment company. So any of the following would qualify them. And then participants have the option to elect a lump sum payment. So this would not change how market return cash balance plans would be accounted for under the current 71530, except for that assumed interest rate. So as a result, the assumed interest credit rating as the discount rate, the benefit obligation of the plans would be equal to their hypothetical account balance. So this would be applied prospectively at its next pension measurement date based on 71530. They would allow early adoption. They have not made a decision yet. The board is going to consider the effective date after they look at stakeholder feedback. So your comments are important. Comments are due August 10th. All right, so that is a niche area and it does this very specific type of pension plan. But if that impacts you or any of your clients, we would love to hear your feedback. So with that, I want to thank you for joining me on this week's blog, and I look forward to seeing you on a future blog. Have a great day, guys. Bye-bye.